I'll say a lot has been said about the 70-hour weeks. I think the great founders during their vacation work for 70 hours.
There's about $20 billion of dry powder that Indian VCs are sitting on.
Until product market fit is proven, frugality is really important.
I always tell entrepreneurs, entrepreneurship is 360 days of frustration and 5 days of glory. And in a leap year, it's 361 days of frustration. So
Possibly going to be a second coming of EdTech. We had all the drama around Byju's, but Physics Wala silently went and built a $100 million revenue company.
Quite a while back, I had written a blog called Focus on Value versus Valuation. So you as an entrepreneur control the value which you are providing.
Welcome to the Prime Venture Partners podcast. This is our first episode for 2024. A leap year after every 4 years this year. So get an extra day. Hope you're excited about that. Two big elections. One, of course, in India coming up in the summer and another one in the fall in the US. Two big markets that Prime invests a lot in. Welcome to the show, Sanjay and Shripati, my two partners. So Sanjay, what are you excited about in 2024? What are some of the areas that are going to interest you as an investor?
You know, Amit, I always tell entrepreneurs, entrepreneurship is 360 days of frustration and 5 days of glory. And in a leap year, it's 361 days of frustration. So everybody's going to have one more day allocated to this. But look, it's an extraordinary time here in India. I think, this entire digitization, the digital public goods, the second order effect of all of that. I think the last decade was really the first order benefits of that, right? It was actually the rollout of the initiatives. It was the first wave of getting, telecom connections, getting smartphone connections, getting bank accounts, getting all of these things. And a few of the things you could do on top of this, right? I think now, with cloud computing and Gen AI and all these things getting mature, India's digital public goods being literally ubiquitous and at, cost structures that are extraordinarily affordable, I think really the wave of innovation that we're going to see starting this year and over the next several years, I think it's going to be mind-blowing in terms of the problems that are going to be solved, the scale at which these are going to get adopted, the scale at which they're going to be transforming lives and livelihoods of whether it is small businesses or consumers. So I couldn't be more excited about what we're going to see. I'm just waiting to see what founders and entrepreneurs are coming up with.
Awesome, Sanjay. Shripati, there's a lot of innovation in India for India, and I know that's a big theme we look at here at Prime. Can you also talk about the global landscape, right? Both in Silicon Valley, otherwise, and also India founders building for the globe?
Yeah, so let's start. I'll start with the second question first. So for our Indian founders building for the globe, I think it's a very interesting time. I feel that we are uniquely positioned both in terms of talent and the cost structures which permit us to do that. I feel that coming after the winter in 2022 and maybe the beginning of dawn with the first rays of light breaking through the night in 2023, I feel that 2024 promises to be a time in which rationality has returned. The markets, when they are rational, are a little bit more predictable as well. And I feel that in this environment, just building solutions and solving for real problems for Indian entrepreneurs where they are looking at the global markets, the opportunities are going to be very exciting. So I feel that we are very well positioned here in 2024, both for India and in the US. I feel that the Indian markets are a close parallel now to the US. The difference between a particular technological way, which is there in the US and versus there in India, is basically non-existent at this point of time.
Actually, that's very interesting, right? Because I would say as recent as 5 years ago, we used to always wonder, well, can this entrepreneur actually make it in the US? Can they go to the US? Will they think, right? I think those barriers have broken down completely right now. And I think founders in Bangalore or in the Bay Area probably have as much knowledge and awareness of the customer requirements, which used to be one of the biggest fears we used to have, right? And the second part is in terms of customer confidence of buying a product. While the pandemic was extremely tragic, one of the upside benefits of the pandemic was it didn't matter if you're across the street on University Avenue or if you're sitting in Bangalore in Koramangala. From the customer perspective, you were the same, right? And so I think a lot of these barriers have broken down, right? So even the go-to market as well, I think has become a lot more streamlined. But that's also to say that there's going to be competition from all parts of the world. It's not just us in the US. So that's where there's opportunity, but there is competition as well.
Absolutely. And I know in the last year's episode, we talked about Gen AI a lot. So I think even now coding is going to get commoditized, right? Because you'll have co-pilots for helping you code and so forth. So I think you'll see, I always used to wonder about Israel as a great country that does a lot of software with such a small country, and now Australia, and then who knows, tomorrow it may be Vietnam and Philippines as well competing with India for the global market. So Sanjay, Prime is known to do a lot of category creating and category defining companies in terms of investing. What kind of companies and founders should talk to Prime, and what are the areas that are exciting, and what kinds of opportunities are exciting to you?
As you said, we like to do things that are category creating or category defining. And companies in the past that we have backed, companies like MyGate, for example, are still sort of one of a kind. Companies like Dozy or Auto Capital, doing two-wheeler leasing, quizzes when we first backed it. There were really no parallels, not just in India, but sometimes even not in the rest of the world. I think what we like are, the reason why I particularly like these kinds of companies is I feel, in general, in entrepreneurship and in life, success is a case of not making the same mistake twice. In the case of a category creating company, you actually have an opportunity to make one mistake, right? Because the customer does not have an alternate solution provider, and they're going to actually go out of their way to try to make you successful and be forgiving. But if you're the follower, you have not gone through the thought process of the first company, and you're only seeing what's up on their website and in their product. And so when you're creating a product, you're just trying as fast as possible to catch up to them. And they are continuously, because they have the benefit of the thought process, they're continuing to accelerate. And the customer is going to be unforgiving of you because they have an alternate, right? So I think people who are continuously solving problems in an innovative way that has not been done before will always be what we find most exciting. And certainly for, one area that we look at. The second one is we've always talked about this aspirin versus vitamin comparison. And I think there's no question in my mind, customers will buy from a startup despite the fact that something is coming from a startup, right? They would, ideally, all of us would, why would we share our information, our data or our company's future with an unknown company when there was an existing, well-known brand providing it? It's because that unknown company is solving a problem that is so difficult for me that I'd rather take the risk of sharing my information with them and going with their solution. And that has to feel like an aspirin for me. It has to be a pain that I'm experiencing today. If it's a nice to have, maybe I might look at it, but I will say, well, I'll wait 6 months, maybe it's not a pressing thing for me. So I think the combination of those two continue to remain what we like. And in terms of timing, I would say it's never too early to talk to us. We have backed companies at the idea stage. We've backed companies when they're pretty mature along. I think it's good for founders to have some early customer validation. I think that's the main thing we look for. And I think that would be the stage that we find, most exciting, right? So solving a problem in a way that has not been solved, confirming that it is really a pain point for a large customer segment and hopefully a homogeneous customer segment, and doing and having some initial validation. I think that's really what I find most exciting.
Shripati, one question that often gets asked for category defining or category creating startups is, if they're in a blue ocean versus a red ocean. Obviously, if you're in a blue ocean, like a MyGate kind of company or a Dozy kind of company, that is very unique. You're creating something that never existed. But then you might have trouble raising from VCs other than Prime, right? How do you think about that? And secondly, would you consider at Prime backing companies that are in red oceans? And if so, there's a lot of competitors and so forth. But what would you look for in a red ocean company? Maybe, Wheels Eye was coming to mind, but any examples you'd like to pick?
Yeah. So maybe I'll see that as answer your second question first, which is that when you're looking at a red ocean, there is a definite benefit to it. The benefit is that you can point to another company and see that, look, there is already a market, right? There is a proven, demonstrable market. And now what you have to prove is that you're actually differentiated from those companies which are out there. And we see that quite a lot in SaaS companies, for instance, which is companies being built out of India, which are going after companies and markets which are a decade old. And we are pretty excited about those kind of companies because these companies could be started in 2010, 2012, in the first generation of the cloud. And now you come with a mobile first Gen AI native solution. You fundamentally have a benefit there. So I think we should, while category creating is something we love to do, I think there is a clear opportunity if you approach red oceans with a differentiated point of view. On the blue ocean side of things, right, how do you convince folks? I think you have to first and foremost understand that it is going to be a long slog, which is convincing folks that there is actually a market here, which also means that people might take a wait and see attitude to it. There are lots of benefits to it. I mean, Peter Thiel talks about it in a 0 to 1 book right there, yeah. That you want to be in a situation where you are the only player, where you get to define the rules, where you're actually setting expectations of the customer. Customer is more forgiving, as Sanjay said. But it also means that you as an entrepreneur need to be a lot more patient before others get the same conviction that you have. Because in most cases, the category creating companies, actually, there's a reason why others are not in that category, right? But you want to be the one which is the exception.
Awesome.
So some things here, Amit, both to augment both of Shripati's points, right? Sometimes timing is a very important thing here. I would say always, right? But there may be a perfect storm, right? Like when MyGate started, it was just about the time when smartphones were getting mass adopted, right? 5 years earlier, that might have been a bit too early. The idea was still the same. People still had the pain point, but the infrastructure was just not there, right? And 5 years later, I guess would have been too late because somebody else would have solved that problem, right? So now a lot of this is hindsight, right? I mean, I was the first mobile payments entrepreneur in India, and it was probably way too early, and so there is a fine line being caught on the bleeding edge versus the leading edge. And unfortunately, history will tell you whether you were on either, and you can't just wait, and because otherwise you might just be too late, right? So I think this is sort of the challenge for many entrepreneurs, because most entrepreneurs are actually inherently very smart. They've thought through it. There is a large problem. There is a large TAM. Execution is sort of the cliche, but the execution is really sometimes one of just the timing was wrong, right? And we misread the market. And many of us as geeks, I try to overestimate the impact of technology in the short run, but underestimate the impact in the long run. And sometimes when you overestimate, you say, oh my God, everybody, of course, they're going to be paying with mobile payments. It was 2006. But 5 years, 6 years later, Paytm came along, and that sort of was the right timing, right, in hindsight. So I think timing plays a very important role. And that, unfortunately, is a question that can be answered only post facto.
No, couldn't agree more with you, Sanjay. One of the things, I used to be a product manager once upon a time, and we would talk a lot about this, that you need to figure out, in what way is the technology trend changing, in what way is the customer behavior changing, in what way is the market dynamic changing, because that has a bearing into what the customer will do, whether they will buy a plane ticket or a train ticket online, or on calling an agent, or going to the railway counter, for those that remember that those days. So I think I do think that it's gotten much better in the last few years, but I don't think enough people spend enough time on customer discovery, market discovery, willingness to pay discovery. So I think these are things that you can do to help improve the odds of timing. But I agree with you that only time will tell if you were right or you were not. Switching gears, maybe either of you can start. What advice are you giving your portfolio companies to be better prepared for 2024 and to get off onto a strong start?
Yeah, maybe I'll take a shot at it. I feel that you need to be in charge of your own destiny, and that's probably the single most important thing. And what that means is that until product market fit is proven, frugality is really important for all companies. And while I expect 2024 to be a better, and I'm optimistic to be a better funding environment than 2023. I mean, by some measures, the funding was down 70% between 2022 and 2023 in Indian venture. I think it will be decidedly up between 2023 and 2024. But I feel that even with that, the growth stage funding specifically will probably continue to be constrained. So in that environment, I think it makes sense to be very mindful of the cash you have and just be razor focused on getting PMF. And as they say, like in PMF is one of those things, you know it when you have it, right? And often entrepreneurs ask, how do I know if I have PMF? If you're asking that question, you probably don't. And when you have that demand and you're unable to fulfill it, or you have that distinct love from the customer, you know you have PMF. So that I'd probably say continues to be a continuing theme from 2023, which I think will be valid even as we go into 24.
I agree with you. I'll just add one comment and love to hear from Sanjay on his advice to the founders, which is PMF also comes in different flavors, right? One is just on the product. Second is on the, like I said earlier, willingness to pay. Like what's the business product market fit? Like, is there a viable business to be built here? And, and then eventually can you scale this, right, to a different level? So couldn't agree more with you that whichever stage you're at, because if you already got the product market fit, but maybe haven't got the business market fit or haven't got the distribution sorted, like you have to keep looking at that. Sanjay, any advice that you are giving to founders to get the year off?
So I think given the funding situation, right, it's actually done some very good things for the founders, right? Because there was a time where 2 years ago, you would always think, well, this other company can also do this, and all they have to do is raise another $50 million, and they can do what you're doing, and they can crush you. I think that time is probably 5 years away again, best case. So if you're a founder, you can focus on what you're doing. You don't have to get distracted, right? Just focus on serving your customer really, really well, right? To Shripati's point, PMF. And it is a lot of boring hard work that has to be done right. Right. So doing the right thing is establishing PMF. Doing things right is sort of how you achieve scale. And I think founders can today say, look, I have to just build my business. Let me not worry about distractions. Let me not worry just because my competitor raised 100 million. There are some responsible VCs there also saying, dude, you got lucky with this 100 million raise. Don't blow it till you establish, the right cycles. And, I think founders often get very concerned about other things that are happening in the market rather than focusing on their own business. I think we are today in an industry where, in an ecosystem where, if you focus on your business and do things right, there's a reasonably high probability that good things will happen. There's never a guarantee in this industry, but I think stay away from distractions, focus on doing the right things, and it's actually very easy, I think, for founders to just stay in their zone of comfort. And I think they're going to get a few years right now to just stay laser focused.
Awesome. Switching gears, can we talk about some specific sectors or trends that you guys would like to back at Prime, right? I know that fintech and SaaS are mainstay, but even those, if there are specific opportunities in either of those that are exciting or other areas that you are looking at.
Yeah, so I'll start with fintech, our favorite space. I've always maintained, there is, if we wanted to, we could just keep investing fund after fund after fund in entirety in fintech. There are so many opportunities here. Of course, you need to get the right entrepreneurs to come along, and the timing has to be right, and so on. But, there are still several pockets, whether we look at, now suddenly, for example, UPI, the limit has been raised to 5 lakhs from 1 lakh. The whole bunch of payment transactions that could not have been done with UPI, including several B2B transactions. So now all of a sudden, UPI might essentially become the backbone for all B2B, for the vast majority of B2B transactions in India, right? There are a small number that are still probably out. Now, from a CFO's perspective, this means that my collections could be real time. It means that my payments could be real time. I could have a real time dashboard of the money in my bank account as opposed to waiting for my books to close and blah, 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 and all what have you, right? I don't know, but I think that's going to create some new opportunities that are going to arise here, right? So I would say the entire area of B2B payments is one that not much has been done, right? We were early investors in Happy. We're early investors in Reco, but I think several of those problems have not been solved at scale, right? Companies did very well. Companies built great products, but I think some of these problems are yet to be solved. So I think the whole payments landscape in India still remains where one or two problems have been solved very well, but there are probably half a dozen more that need to be solved well. Lending, again, we see pockets of it. We see consumer lending. Obviously, we won't back companies that are doing exactly what one of our other portfolio companies is doing. But at the same time, I think there are, it's all getting mainstream now, right? So we are going to we are an underlent economy, but, we are going to move to an economy where a few years from now, most of the transactions that we're doing, whether it will be based on credit, whether we choose to revolve and pay interest is up to the thing. So credit will continue to be a big use case. There are several segments which have just got digitized, right? They've started doing UPI payments. When we were on our team offsite, we stopped near Chitradurga on the highway in Bangalore, in Karnataka, and there was a lady who sold us tender coconut, and we paid 12 rupees to her, using UPI, right? She's not yet using her bank account, but the money is going into her bank account. So there's that entire population that is slowly getting included, and which should benefit from having gotten the early stages of digitization. And then there's the whole insurance sector, right? We're seeing still fairly vanilla products being offered. Just really the distribution has probably gotten innovated on a little bit, but again, far from mass adoption. And of course, with companies like Punch that we have backed, the whole investment sector is starting to get bigger and bigger. More people are coming in. The cost of serving, a lot of the stuff that we had worked on with Aadhaar and UPI are now we're going to see, as I said earlier, the second order benefits. So wide open opportunity in thing. Other areas which are following in India, whether it's the whole healthcare system that's getting digitized, etc. I think we'll start seeing a lot of those. And with all of these applications come infrastructure opportunities, right? Which may be seen as SaaS, whether it's vertical SaaS for the fintech industry, for the healthcare industry, and so on. So once again, no shortage of opportunities. I think that's the broad message.
So Sanjay, in fintech, which is so rich, I think wealth tech is another area that we are very actively looking at that is very, very exciting. Shripati, jumping to you about SaaS, right? Sanjay just mentioned towards the closing vertical SaaS, and we've done a couple of investments focused on the US. What is your view of the opportunities in SaaS, and is just the India market ready for SaaS companies, right, which are fully monetizable in India? So can you talk a little bit about interesting trends or excitement that you have in SaaS?
I think that the SaaS is going to see a fairly significant set of opportunities coming from the use of generative AI. Because it happens to be a field in which you're manipulating and accessing a lot of data. And generative AI just makes it easier and cheaper to do the job effectively. So I think we are going to see a lot of SaaS companies moving in that area. To your question about the Indian SaaS, the opportunity in Indian SaaS, I think it's growing, but we have to be very specific about which area that particular profit pool is therein. For instance, I think that in general, SaaS models which combine subscription along with transactional revenue will probably find together the profit pool to be attractive. One classic example of that which we see is in fintech. And we have companies in our own portfolio where they're providing infrastructure to Indian fintechs, to Indian financial services companies. And the business model is a combination of subscription and transaction. So I'd encourage entrepreneurs to actually look at transactional SaaS, if I may, as an area of interest. Related to that, is SaaS is a business model, right? So what are the sectors in which we are seeing interest there? I feel that generative AI will have a lot of very innovative, disruptive capability in manufacturing. Now, manufacturing as an area is going to be very interesting for us, especially with the China Plus One and the general push that manufacturing has seen in India. With generative AI, we might see what we are calling manufacturing 4.0, where the entire manufacturing floor and the operational flow and the workflow around that can get digitized in a very interesting way. And generative AI can be very meaningful. Actually, generative AI is also very meaningful on the whole robotics side. So I feel that Manufacturing in general is an area where we expect to see exciting companies, or we are very keenly looking at them. And the other area where generative AI is going to be very meaningful and is already having changes is gaming. We are seeing a lot of use of tools in gaming, and generative AI is already being used there. But we are also going to see interesting things like NPCs, which are non-playing characters. So imagine that you're playing a game and you have a coach which is hovering around you and providing you advice on how to play the game, right? So, or it's a voice inside your helmet if you're playing cricket, right? So all these kind of things, we feel that...
Leave the ball outside the ostrom. I told you to leave the ball.
Exactly. So I feel that all these areas will see fairly significant opportunities to create new companies.
Just to round that off, I think in the non-fintech and SaaS areas, I feel like there's possibly going to be a second coming of edtech. We had all the drama around Byju's, but PhysicsWallah silently went and built a $100 million revenue company, which is handsomely profitable. I think 15-20% of actual EBITDA, if not PAT. And so I think there are all kinds of opportunities in the digitization of India, right? We have several companies in our portfolio. Sanjay mentioned healthcare. There's all kinds of other interesting companies where that is happening. So I think the opportunities are replete. I think we're always both intrigued and impressed by the ingenuity of entrepreneurs to come up with these opportunities. Go ahead, Sanjay.
I want to talk about a company that we met recently, not in our portfolio yet at least. This is a company out of a small town in India that's doing something in healthcare with AI. It's a SaaS model and is selling to healthcare institutions around the world. It's some pretty substantial scale, pretty decent ticket size. And what he's doing is giving them a 10-day trial, and then they start paying, right? I would have never fathomed that a company out of a small town like that is selling a product in a highly regulated space, which is globally regulated by different regulators, as a startup, right? And is, giving them a free trial, and then they start paying, right? And, pretty substantial ticket sizes, pretty substantial scale already, right? So, to your point, or the example you used of PhysicsWallah as well, right? I think the whole distribution game is changing, right? And this traditional model of saying, look, I will have a sales team, I'll have a marketing department, I'm going to do this, I'm going to do this, I'm going to do that, and then I'm going to start charging people after they've done the free trial, whatever. But after I've met them in person, many of these things are going to be disrupted. And companies, I think it's not just, the innovation is not just necessarily about the product anymore. It could be about the whole offering, including the go-to-market, the business model, and what have you. And it's not easy for people to copy them. One might think, well, okay, I'll create my own YouTube channel, right? It is not easy to copy. So I think we will start creating, and if you look at globally in the US, Mr. Beast, right? And the 200 million views that he's got, etc. So I think all of these things are up for innovation.
Absolutely. Actually, that leads me on to my next question, which is that, and again, now you made two dimensions to it, about Bharat. Are there real business opportunities in Bharat, right? For companies that are largely exclusively focused on Bharat, as opposed to companies that are also serving Bharat, right? So call it Bharat, call it tier 3, tier 4, tier 5, whatever. And the nuance that you helped me bring out, Sanjay, is what about entrepreneurs from these areas, right? Do you have to be from a Bangalore or a Delhi NCR or Mumbai or IIT or IIM? There are many kind of tags. Or can you be an entrepreneur from, a smaller emerging city and building for the world? So whoever wants to take is the Bharat business opportunity real for a standalone Bharat business? I don't mean as an add-on.
So I'll start with an anecdote on that topic. Several years ago, I talked a little bit about my MCheck experience, 2006 to 2010, and I had done a study with people saying, how much would you pay to pay your electricity bill from your phone, right? And believe it or not, everybody sitting in these plush air-conditioned offices said zero, although we knew they could pay 20 rupees. But somebody who was a laborer working in the construction site was very happy to pay 10 to 20 rupees because they said it's 10 rupees each way by bus, and I lose half day of income. So I will happily pay, right? So I realized that time is money for them. And Indians, everybody says Indians are cost conscious. I always realize then Indians are value conscious, right? So coming back to tier 2, tier 3 India, which for some reason has historically been associated with inferior buying power, which is also not true. If you look at the number of Mercedes-Benz or luxury cars selling in Aurangabad and all of these towns, I think we all have realized that there's plenty of money there. And to Shripati's point earlier about gaming and things like that, I think the products that they look for and how they associate with the products and how they associate with value will probably be different. And it's going to take an entrepreneur to really study some of these to understand where are the opportunities. But is there a pot of gold? Absolutely.
Awesome. Shripati, do you want to add both to the gaming point? Because I remember when you and I were in Beijing in China in 2018, pre-COVID era, couple of the VCs there told us, look, even people that are at the sort of lower end of the economic strata will spend 10, 15, 20% of their income on entertainment and gaming and content. So it'll take you by surprise. So don't wait for that to happen. But also about Bharat entrepreneurs, both of those topics.
Yeah, actually, there's a similar anecdote to India. I was talking to a friend who said that he was in a tier 2 town in India, and a kid came up to him and wanted to essentially pay him and have him load up his account in PUBG so that he could actually play the game, and the amount was 2,000 rupees. It just tells you something, right? Which is that entertainment is almost like a fundamental human need, right? And that high quality entertainment is now available in your device. And gaming is the most immersive form of that entertainment. It's interactive, it's immersive, it's highly entertaining. And so I feel that all of those things which we talked about when we were in China many, many moons ago, is very much coming up to fore in India. And that's why it makes it like such an exciting and emerging market.
Absolutely. Sanjay, anything about entrepreneurs building from smaller cities or towns? Do you think they can get funded? Do you think they can build large companies? Do you think they can attract talent? I know there are some famous examples, right? Like Rohit Bhatt of 99 Games in Udupi, who you and I met last year, and so forth. Is there a geographical barrier to building? Do you have to be in Bangalore or Delhi NCR?
So, Amit, I feel there are two answers to that question, right? Is there a barrier for innovation? The answer is absolutely not, right? But from a practical perspective, if you have to build a team and you have to build talent, get talent for the organization, so the entrepreneur themselves might be residing in these little towns, and they may come up with the idea, which doesn't even necessarily have to be for the small towns, right? Like I told you the example of the entrepreneur selling globally here. But I think at some point, if you need to scale up and build the right team and attract the right talent, you need to be in a city with a little more heft, right? It doesn't always have to be a Bangalore or a Delhi NCR or a Pune or a Hyderabad or a Mumbai, but, so a city like a Jaipur, for example. Absolutely. I think we're seeing several of these happening, right? However, I always tell founders, look, as an investor, you are 2% of my portfolio if you've invested in 100 companies over 10 years. But for you, you're 100% of your portfolio. So you have to be willing to minimize the risks in building your company. And if that means moving to Koromangala or to HSR layout, so be it, right? So I think entrepreneurs also the goal is not to prove that I can build a big company out of a small town. The goal is to make your company successful, right? So I think entrepreneurs have just got to be practical and unemotional about it and do what's right for their business. If staying in a small town is the right thing to do, great.
I was just reminded of Shripati's anecdote about go get your product market fit. So in some cases, the small town, maybe slightly easier to attract talent, retain talent, lower cost structure. Maybe you kind of get to a certain heft, and then you figure out that you need to either move or be dual homed and be in a larger city and a.
I think that is becoming clear now, right? We have got to learn to be in a distributed world, right? Talent is all over, and you need to find the best talent. There will be a certain concentration of talent in an office, but as companies, I think all are going to be sort of a distributed talent.
Great. Moving along, we can't be on a VC podcast and not talk about fundraising, right? Both, last year was tough. 2022, latter half was pretty tough as well. What do you expect 2024 to be? And what specific tips or advice would you give entrepreneurs who are raising capital, right? And I'm still thinking, kind of the pre-growth rounds. So think, say like a seed round of 2 million from Prime or of $6 to $10 million Series A? What does it take to be funding ready, and so that you can crack it in 2024?
For a seed round from Prime, normally if you're 100 million ARR and profitable, no, just kidding.
And you had a 4.0 GPA, and you can bowl really fast balls swinging at 140 kilometers per hour. We'll just write you a check immediately.
So, unfortunately, there is no formula here, right? And I think every company is unique, which is sort of what makes it very exciting also, right? For us as well. Otherwise, ChatGPT would have been doing our jobs for us. So I think a lot of it is, about the people. Do you think you can work well together between the VCs and the entrepreneurs, especially the seed stage thing? And then, of course, both sides have to believe that there is a large opportunity, a large problem being solved, that this founding team can, is really best suited to solve this problem. They understand the problem very well. They may not have the right solution yet, but at least they're super passionate and knowledgeable about the problem. It's likely that they will find the right solution to the problem. And then, of course, the impact of technology and the role of technology in addressing the problem that they're addressing and so on. These are all sort of, the main things. We, of course, as we've always said, we like to see some product market fit. It doesn't have to be, is it 100K ARR? Is it 500K ARR? Is it 2 million ARR? It's all of the above and none of the above as well, right? So each of those is things. So I think the best thing for us from a seed perspective, I would say, or in general, for entrepreneurs, is really focus on the customer and the problem, right? If you have the deeper the understanding, the nuanced understanding you have, I think that's what's going to help communicate and convince to people that you're likely to be able to solve this problem, right? I think that's all one can expect at seed. A few customers who validate saying, yes, this person really seems to understand my problem. What they've shown me so far seems to be working. We've tried a few things. And if it really works, we will be more committed to it. I think that's what we would look for. In terms of Series A and Series B, I think now the market is certainly, it's not going to be very different in 2024. However, I think the founders have realized it and know what to do. I think in 2022, 2023, there's a little bit of deer in headlights because the market suddenly changed and we were all trying to figure it out. But now I think founders know what it means to establish PMF, what it means to establish profitable unit economics and repeatability on the sales process, etc. So I think a lot more companies will be able to access the capital that's been sitting on the sidelines saying, this is what I want to see. So I'm quite bullish about the opportunities for companies to raise follow-on rounds in 2024.
Sure. Shripati, you want to add anything?
Yeah, just say
specific
that,
advice?
quite a while back, I had written a blog called Focus on Value versus Valuation, right? So you as an entrepreneur control the value which you are providing. I think you should focus on that. Valuation is really a market-making system between investors and entrepreneurs, right? It's a supply and demand of capital. And that's what determines the valuation. I find it, a lot of entrepreneurs find that as a hard hurdle to cross because they have a certain preset idea of what their company is worth. And of course, every entrepreneur thinks that their company is worth a lot. And it is also true that it might very well be. But realizing that getting timely infusion of capital does a lot more to increasing enterprise value of the company than actually optimizing the perfect valuation and getting the most optimal valuation. So waiting 6 months more and trying to get that extra 20-30% on the valuation versus getting the money now and getting off the ground, I would really encourage entrepreneurs to do the former, because that's how you build companies, and you build companies quickly and you keep momentum. And I think that momentum is the oxygen for a company.
Absolutely.
And
if I may,
point. Sorry, good.
Yeah.
Shripati just made a very important point, right? Because time isn't on your side, right? I mean, isn't normally on yours unless you have some deep IP, right? So you really need to, I would say, right size the valuation, the funding round, maybe take a little less money to get to the next stage. But, I wouldn't do anything to slow down my opportunity just by, worrying about the second decimal.
Absolutely. No, I was going to say the same thing, that I think sometimes right sizing the round can still, satisfy both the ability to close it in a timely manner and sort of manage the valuation and the dilution. The second thing is, I think people think of every round as, it being a defining moment in the company's history. But if you're really building for the long haul, which is the only reason really to do VC, right? There's some incredible examples like Sridhar Vembu and many other entrepreneurs who bootstrapped, right? Paras Chopra, his previous company, Wingify, then it's fine. Then you can do whatever. Else, I think it's much smarter to really keep moving, keep the momentum going, and right size it, sort of close it, and move on. So I think people do get a bit fixated on that. We also have these kind of cards here, which are a unique new innovation, where we can pick some surprise questions that have been sent in. So Sanjay or Shripati, you want to pick one of these and see if you want to talk about it? You can pick a second one as well.
Oh boy, unicorns in 2024, fundraising 2024, we kind of talked about. So in terms of unicorns, I think, the unicorns in 2024 as a rule will earn their unicorn status for sure, right? I think 2021, there were several unicorns that probably got the status because of the potential perceived in them. And in many cases, it was justified. In some cases, probably not. But I think whatever happens in 2024, we will see companies, if they get to unicorn status, will be doing probably close to $100 million of revenue, if not more, will have clear unit economics, will have a clear path to profitability, if not already being profitable, and will be clearly established as the segment leader in their category, as the category leader, right? So that's what I would say. How many will we see? I would hope that we'd see double digits, right? I know there was a crazy year in 21, but we probably didn't see as many in 23. I think there would be 10, there should be about 8 to 10 companies in India, maybe 15 at the upper end, that should get into that, because I think a lot of companies recorrected themselves and focused on their growth and now have, the right type of metrics. And so getting to unicorn is just a question of scale for them.
If I can add, Sanjay, that I think we'll see at least twice as many tech IPOs as we did last year in 2023, and with perhaps more realistic valuations, at least at the listing price, which I think some of the stalwarts who have now recovered, like the Paytms and Zomatos, right, perhaps got carried away in the years that they did the IPO. So I think both the unicorns and public listings, I think, will be quite meaningful in 2024.
And I think we might start seeing a number of sub-unicorn IPOs in India, right? Because I think companies will get to reasonable scale and reasonable profitability and, steady growth, like 20-30% year-on-year growth, and be able to IPO in the $300 to $600 million range, and then continue to build, right? That doesn't mean everybody exits the company. Even the VCs might just stick along if required. And the companies will grow into their unicorn valuations kind of in the public markets, right? So that I think might happen more.
And I would say that just to add to that point of Sanjay's, that's such an exciting opportunity for Indian entrepreneurs, because the same IPO in the US will require 5x the scale and probably 10x the cost of going IPO. So to be able to go IPO when you are, 30, 40, $50 million of revenue and profitable is just an incredible opportunity that we have right now. And this is a recent thing, our IPO markets have become more regular friendly thanks to regulatory work there. And also our institutional investors have become more friendly. And because now they understand what is the nature, because tech companies are just a different kind of fruit, right? They're used to all having like mangoes, right? And now suddenly one pomegranate shows up and it just looks very different, right? So
it's very healthy though.
It's very healthy, yes.
And his favorite fruit.
It happens to be my favorite fruit. And over the long term, very healthy for you. So I think that the fact that tech companies have this particular characteristic where you require investments, where once the scale comes, they might actually see tremendous profitability, where there are network effects, where there is use of data, where you can get critical mass. All these kind of things are unique to tech companies, which are very different than bricks and mortar. And I think the Indian institutional investors are both aware of it, they understand the nuances of it, and they are interested in investing in those companies. So I think I'm very excited in 2024 about basically the beginning of what should be a very long and durable systemic trend.
Yeah, and one thing I can tell you from my time at Make My Trip when we went IPO on NASDAQ it's very, very different to behave as a publicly traded company than a private company, where you just have to hang a call to your buddy Shripati on the board and say, we're going to miss this quarter, don't worry about it. We'll make it up next quarter. Oops, can do, right? Got to go do disclosures, got to make it available. All your competitors can read everything. So I think the earlier you can quote unquote pretend that you're going to be a publicly traded company, whether it's on governance, whether it's on higher quality of sort of management business practices, it's going to be more interesting. The other thing is that not just the public markets, there's about $20 billion of dry powder that Indian VCs are sitting on. So at some point, while I asked the question on the Series A and Series B, I think people are going to start deploying, right? I mean, we ourselves are actively in the market to invest in great companies. So I'm hopeful that 2024 will be a more exciting year for raising money for companies that are doing real business.
But I think that is the point, Amit. Companies that are doing real business, right? I think there is no money for companies that have, vanity metrics and flaky business models, right? I think that is the lesson learned over the last 2 years. And yes, this 20 billion will be deployed, I think, because people have learned and have course corrected. So that's why the funding will get better.
Absolutely. Shripati, you want to pick a surprise question and then bring this to a wrap?
So, let me pick this question. I think I get to ask you the question then.
Yes, sure.
So, what are the X factors in successful founders?
All right. That's a interesting one. I think deep customer empathy. I think Sanjay mentioned this earlier, right? Having a very deep, visceral, constant connection to the customer as to what is it that they need, what is it that you're solving for, I think is very, very interesting and very important. I think great founders have ability to zoom out and storytell, but also go to the minutiae of the details on the MIS for last month and why, GST was collected or not collected, right? So ability to zoom out and zoom in. And a third, which is my favorite, which I'll bring up here, which is ability to build great organizations, right? To ability to hire talent, perhaps even better than yourselves, in fact, hopefully better than yourselves, and get the heck out of the way, right? To be able to delegate to them. So I'd say, founders are, we live here to serve founders at Prime. And these three things I would pick, right? So deep customer empathy, ability to zoom out, zoom into the details, and then really build orgs and focus your time on what you can do the best value add on.
Great point, Sanjay.
I'll say a lot has been said about the 70-hour weeks. I think the great founders during their vacation work for 70 hours a week. And I think, just keep plugging away, right? Never take no for an answer. Just keep going. Learn, listen to others, but make your own independent decisions, right? I think that is the biggest thing. And some of the amazing founders that we have worked closely with, especially in the last year, I've been noticing, they're always going and meeting people, listening to people, talking to people, learning, but they're very, very thoughtful when they make their decisions, right? They're not being swayed by other people's, guidance, even people, people being sort of loud with them, people being aggressive with them. They listen calmly to everything. I think calm is a superpower as well for these founders, that you got to be excited at the same time in your decision making, you got to be calm and thoughtful about it. And I think that's another great.
Yeah, I always think that it's a very specific or a right balance between humility and ambition, right? And because if you are ambitious is when you say, hey, look, you don't understand what I'm doing, but I'm going to prove it to you, right? Humility is listening and saying, maybe there is something which I am missing, which my customer is telling me, or which an investor is telling me, or if my friend is telling me, right? And how do you mix the two and bring it together to build just the right company? Well, thank you, Amit and Sanjay, for a wonderful podcast, and we'll see you next time.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.